Recently, we've shared that the inventory of unsold homes is growing, and in recent weeks, home sales have faltered in the face of 7% mortgage rates. We're going to focus today's video on the home price trends that are emerging for the 2025 housing market. We're noticing in the data some signals that home prices nationally could turn negative this spring, showing year over year home price declines for the first time since early 2023. There are plenty of markets across the country where inventory of unsold homes built up over the last few years, and home prices have ticked down in places like Austin, Texas, and Tampa, Florida. But nationally, home prices are still higher than a year prior. Some places, like in the north, like New York, have had pretty significant home price gains in 2024, since inventory is still very tight there. Now, when we look at the active market data each week that we track at Altos, there are some signals this spring that more markets are softening and fewer that are pushing higher. Therefore, prices averaged across the country could be turning negative compared to last year. So there are a bunch of ways to measure home prices and even more signals about the future sales prices. And we'll look at some of those today, but I think it's important to note that almost none of these metrics, almost all of these metrics have been showing flatter home price appreciation. After a little burst of strength a few months ago, many of the home price metrics have gradually eased down close to flat from a year ago. It is now that some of them are sliding below the year prior, and this is driven by relentlessly higher mortgage rates, of course. So a lot of data to look at this week. I'm Mike Simonsen. I'm the president of Altos Research here at HousingWire. Let's take a look at the data for the third week of January 2025. So we're starting today with a look at home prices. The median price of all the homes in the US this week is $421,000. If you want to buy a home, this is what's available. So what's notable is that this home price metric is now 0.7% below last year at this time. Of all the homes on the market this year, they are now fractionally cheaper than a year ago. It is important to note how unusual this is overall long term. So this is one signal nationally of home prices declining from last year. The market is, still at a standstill with mortgage rates are over 7%. We see it in the demand metrics for home, and the supply is building, and we can see the impact of higher mortgage rates on home prices too. So in this chart, we have the median ask price for all the homes in the US. Each line is a year. By the end of January each year, you can already see the trajectory for home prices that they'll take for the full year. So in 2022, that's the gray line here. It was the end of the pandemic boom, and buyers were still rushing in to get a home before mortgage rates climbed. So there was steep price appreciation in the first half of the year, 2022. Home prices climbed each week quickly, and at the time they were 10 to 15% more expensive than the year prior, 10 to 15% more. So then 2023, that's the lavender line here, the purple line here. The spring slope was much less steep. Then 2024 started a bit higher, but by June, the June price peak for the year is still below the June 22 peak. So now the 2025 line is emerging at the left end of the chart. The price appreciation curve is flatter still this year. Each week, even though the best new inventory hits the market, these are being priced fractionally cheaper than last year. So the data is telling us that home sellers and listing agents know exactly where the demand is for homes, and they understand the affordability crunch that buyers face, and therefore they're pricing listings a little lower than last year at this time. So that's the active market of homes for sale. Meanwhile, the price of the new contracts pending each week came in at $384,700 this week, 384, almost 385, which was a little jump from last week. The median price paid for the newly pending home sales has been averaging just 2% more than a year ago. So this measure is still showing barely positive home price gains, while the active listings are negative. And keep in mind that not all the home price measures are negative, right? Some of them are still positive, still showing positive home price changes over last year. There is nothing, though, in any of the home price data that this January that's showing home price appreciation like momentum gathering. The momentum is is negative. We're going to watch these data points over the next few weeks to see if more of them turn negative. Uh, the home price risk is to the downside now, not to the upside. Here's one bright spot, though. 2025 is the third year in a row of flattish home price gains over the last few years, and hopefully over the next few. Incomes are climbing faster than home prices. When income climbs faster than the price, we improve affordability. So this market is slowly improving affordability in the country. At some point in the future, the cost of money drops, and that will be a dramatic benefit for affordability too. So we use the percent of homes on the market with price reductions as a leading indicator for future sales prices. And the signals here are not particularly strong either. So right now, 33% of the active listings have taken a price cut from the original list price. Last year at this time, it was 31%. So more sellers now are facing an absence of buyer demand. So they feel necessary to reduce their asking price. More people now. In 2023, this number was 33.9%. It's 33 now. It was almost 34 2 years ago. The weakest pricing moment of the last 3 years was the fourth quarter of 2022. So by January of 23, price cuts were still elevated. But at that moment, we were being surprised at how quickly the market was recovering. You could see that recovery in the lavender line here. It was declining steeply each week. At the time, 80 or 90 basis point move per week compared with just 50 basis points now. So in this chart, each line is a year again, and we're at the left end of the chart, and you can see how the navy blue line is flattening out. At the current pace, it looks like by the end of February, we'll have the most home price reductions of any February in many recent years. So it looks like, see how that navy line is about to cross over the purple line here? 2023 pricing was recovering with sharply fewer price cuts each week. This year is much weaker on home prices. So these are the homes that are on the market now with no offers. They take a price cut and hopefully get an offer in February. That deal closes in March. So by April, you should be hearing the headlines reflect the weakness that we can see in the active market data right now. And when we look at the supply data, the supply of active inventory is continuing to grow. And that says these price trends are poised to continue. So on the supply side, there were 51,000 new listings unsold this week. That's 13% more than last year at this time. Including the immediate sales, those that are already sold. There were 4% more sellers now than a year ago. So this continues the expected pattern for the year, which is more sellers each week than a year ago. The growing supply pattern is healthy if we also get more buyers. But right now, with the cost of money so high, it's not showing any signs of decline on the mortgage rates. Buyers are still very obviously waiting. So inventory is building across the country. So in this chart, each line is a year with the weekly count of the unsold new listings. At the left end of the chart, you can see the sellers in 2025 are looking much more like the old days. The gray lines here are previous years. The bright blue line is last year's curve. In 2024, there were more sellers each week than 2023. 25 continues that trend with more than 24. So now we've been out of the crazy pandemic market longer than we were in it, and we are finally returning to more normal levels of sellers and unsold inventory. Inventory is building this year, and I think it is important to point out that the more sellers are generally good for the housing market. We want to see this curve grow from 50,000 to 60 to 70 to 80,000 each week by peaking in June. I don't expect we'll see 100,000 new listings like a few of the lines here in a given week, like we did last decade, but maybe we'll hit 80K. So more sellers means more selection for buyers. It means less upward pressure on home prices, which we're seeing now. More sellers implies improved affordability, especially over time, which we're seeing now. The vocabulary here can be tricky, right? Because price weakness is actually probably a good trend for Americans facing an affordability crisis. When we look at the total inventory of unsold homes on the market, That count continues to climb for the third week into January. So there are now 637,000 single-family homes unsold on the market. That's up 0.7% from last week and is 26.5% more than last year. So most years in January, we see some fluctuation up and down until inventory starts building for the spring season more consistently in February. But the circumstances this year seem like they're set up that we may be already past the low point of inventory for the year. A couple of weeks ago, we counted 624,000 homes on the market. We're at 637 now. So at the left end of the chart here, you can see the 2025 line taking shape. Each line is a year here. And most years, there are some ups and downs with the total number of homes on the market in January and February. Most years experience a few down weeks with less inventory before the spring season really kicks in February. So far this year, we've only had up weeks. That is, inventory is building earlier in the season. This is a function of slightly more sellers and still fewer buyers. So home buyers are waiting. Remember, during the pandemic boom, there were many more buyers than sellers. So inventory kept declining all the way into March or April. We were buying everything in sight. This year's inventory trends are showing renewed weakness in demand after a slightly better Q4. It's funny too, because just now we're starting to see the headlines for December from the traditional housing data sources, and those are now telling you that Q4 had some improvement in sales volume, like thanks a lot. But this housing market never relents, and in the active data, those December sales gains are gone. There were 52,000 new contracts pending this week. That was another week when new sales came in fewer than last year at this time. So last year saw 56,000 sales started during the same week of January. We're at 52,000 now. So that's 7% fewer sales this week than the same week a year ago. It's pretty clear that home sales in January are underperforming 2024. There are 266,000 single-family homes in the contract pending stage, the stage before the sale closes. That's 3.5% fewer than last year at this time. And the gap between last year and this year is growing. So last week was 2% fewer total pendings. Now it's 3.5% fewer. So, by the way, we're looking at single-family homes here, these single-family home transactions. The data for condos is actually even weaker. In this chart, each bar is a week with the total count of homes in the contract pending stage. The taller the bar, the more sales are underway. This week is the far right end of the chart. The bright blue section are the new contracts pending for the given week. So the bigger the bright blue part, those are more deals that are getting started in a given week. That's our immediate gauge of demand. So that number was 7% fewer than last year and has been averaging like 9% fewer sales over the last few weeks. In the fourth quarter last year, fourth quarter 2024, sales were coming in above the year prior. So those are the headlines we're hearing now. And that was, of course, the data we shared back then as well. So mortgage rates, rose over 7% in December. So now we're seeing the slowdown in buyer demand. And we can see it in prices, and we can see it in the offers being made each week. Okay, so that's all the data we have time for today. If you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com. You can now sign up for a free Altos account to get your local data. We'll help you dive into the local market, and you can start helping people today understand this crazy housing market. So check that out. There's a link in the description below. We'll see you soon.